Alrighty, what's up everybody? This is my weekly analysis of the Forex market and some plays last week and possible setups this week. So, it's been 2 weeks since I made a video, but anyways, the Great Britain pound US dollar, your call right here, price came right to here, it fell down to here. So from here to here, 350 pips. So that was a nice move. I was hoping it would pull down here, but it did decided not to do that. Then it came back up here, and it fell again. But this is why the Forex market is, in my opinion, the best market to trade. Because if you got in, let's see here, let's move right here. If you got in right here, okay, and you took profit right here, right here. Let's see, move this out a little bit. Okay, stop loss would be right up here. Okay. So if you took this trade right here, and you took profit right here, you just got a risk to reward of one. Let's see. Let's move this up a little bit. So your stop loss would be right here. Okay. You enter somewhere in here. Your risk to reward would be 1 to 15, which is amazing. Because if you risk 1% of your account right here, and a week or 2 weeks later, you just gained 15% of your account, which is incredible. If you risked 2%, and you caught all these pips, you would have gained 30% of your account. You risked 2%, and you gain 30%. That is just incredible. Where else can you do that? I mean, really, where else? Where? You risked so little, but you gain 30%? That's insane. One trade. Okay. So this trade was about 350 pips. Okay. And then I called out Great Britain pound Canadian. Okay. So lower time frame. What did I say? Right here. Tap the bottom of this wick right here. About right there. Okay, as you see, came down, it touched this right here, then it fell down, then it touched it again right here. Let's go on lower time frame. Let's see here. Right here. Kissed it. And I pointed out that it made this pattern. And then as you can see, it fell all the way down here. So from here, if you got in right here, you caught 400 pips right here. Okay. So, what is your risk to reward for that? Okay. Let's say, let's remove this. So you entered here. Okay. Okay, the stop loss is above here. So you have 30 pip stop loss. Comes all the way down to here. Your risk to reward ratio is 1 to 13. 1 to 13. So if you risk 1% right here and you catch this move down, you just gained 13% of your account. You risked 1%, but you gained 13%. If you risked 2% of your account right here, you gain 26% of your account right here. That is just insane. That is incredible. That means if you risked 1% of your account and you lose, say, 10 trades in a row, and you lose 10% of your account, but you gain this trade right here, you win this trade right here, you gain 13% of your account. You just, on your 11th trade, you take this trade and you gain 13% of your account. You just gained 3% of your account and you lost 10 straight trades. That's why I think the Forex market is way better. You know, stock market's slow. Bitcoin's too volatile. But right here, that's a gorgeous move right here. Then as see last week, it jumped up. It touched this area again, and now it seems to be falling again. But as you can see right here, it's not really moving real aggressive. It kind of creates this channel right here. Okay. Creates this channel right here. And it pops up. This is kind of like a reversal pattern. So we'll see what happens. Some imbalance right here. Price has to fill. But I think it's going to daily. It's going to daily. Right here. So on the daily timeline, this last red candle before this uptrend, this last down candle, go on right on top of the body, right there, maybe right there. as you can see, price kissed this right here and then spiked up. And you would have caught 435 pips. That's just insane. Okay. That's another 13 or 15 to 1 ratio right here. That's awesome. And then, let's see, I called out the euro, New Zealand dollar. I called, let's see, what did I say? Did I use the daily of this one? Top this candlestick right here, I think. Yeah. Okay. So right here, it kissed this area and jumped up 400 pips. And then it hit this kind of like zone right here. You got some support, break support, resistance, falls, resistance, falls. You got some resistance and it falls again. But right here, this right here was kind of like this is a reversal pattern. Just see how this is aggressive. This is aggressive. This is not aggressive. This is just kind of slow. So it came down to here, right? Right, this last down candle for the uptrend came out to here, to this area, or even the middle of this candlestick right here, right here, came right down to here, jumped up. Another 380 pips. Then as you can see, of course right here, this is going up, it's going down, divergence. See, reversal pattern right here, or a sign of a reversal. So that came back down this area, shot up again, right here, shot up again, and then it melted, it broke through. Okay, so the overall picture has going on here, right? Okay. That break, retest up. Okay. And as you can see, going on a lower time frame, you have this right here. See, reversal pattern. Right, go up here. Right. Break, retest, and then you get this big move up. From here to here, 500 pips. Oh man. In 2 days. This happened Thursday and Friday. Right here. Right? Thursday. It's the daily time frame. Thursday and Friday. Man, that moved up. And as you can see, this last up candle for this move down, the middle of it, about right here. Bam, right there. Comes down. So 240 pips right there. Man, that's awesome. So your risk to reward for this little short position right here. Okay. Price is currently right here. Let's say you risked 30 pips. Your risk to reward is 1 to 7. Okay. So if you risk 1% right here, you have a 30 pip stop loss, you just gain 7% of your account. A lot of people, when they trade, they want to get, they're happy if they get like 3% of their account, or their goal is to get 2 or 3% of their account a week. You know what? That's peanuts. That's peanuts. That's peanuts. That's peanuts. Peanuts. You could have a shorter stop loss. You have a 20 pip stop loss. Right there. And then your risk to reward is 1 to 11. So if you have $10,000 in your account and you risked 1%, you just gained $1,000 there, 10%, or 11%, $1,100. One trade. You risked 1% and you gained 11%. That's incredible. That's why I think the Forex market is way better. The risk to reward is just so much better. I see something here. So price came all the way down to here. Seemed like it came down to here. This area. Okay. Well, this is a 4-hour timeline. So this 4-hour candlestick right here. Right here. Just go right in the middle of that. About right there. You get this little up trend right here. This price goes a little bit below it, then it shoots up. Yeah. You could have waited for this doji right here and then gotten in, or you could have waited for this engulfing candlestick right here, then you could have gotten in, or let's see, it's 20 pips drawdown. Okay, you could have waited for this area to shoot up, breaks these highs. Okay, you know that this is the area where it could reverse, so it shoots up in the middle of this last candlestick before this uptrend, before this uptrend right here, right there. Pinpoint accuracy right here. So let's go right in the middle. right there. Look at that. Right here. On the 15-minute timeline. Perfect. Perfect entry right here. Perfect. So, what is the risk to reward on this right here? So this is your entry right here. Your stop loss is right here. And you take profit. Say you take profit right around here. Your risk to reward for this trade right here. Pinpoint accuracy right here. 1 to 22. So you risk 1% right here. Your stop loss is right here. You gain all these pips right here, which is 500 pips. You just gain 22% of your account. And you only risked 1%. I mean, that's awesome. If you would have risked 2%, you would have gained 44% of your account right here. You risked 2% and you gain 44%. Where in the world can you do that? If you have a $10,000 account and you risk 2%, you just gained $4,400 right here. This move right here. That is just incredible. It does not get much better than that. You could lose 5 trades in a row and risk 1%, lose 5% of your account, and then you gain this. You just gain 17% of your account after your losses right here with this move right here. That's insane. I mean, this thing just moved. Same, the euro, Australian dollar, it moves similar. Okay. So as we see, the daily we were looking at. Okay, so this last candlestick right here. Right here. Let's go on top of the body right there. Yeah, right here. And it kissed it right here. And being this move right here. Right, put a shot up, came down to this area, this last candlestick right here. The middle of this candlestick, this last down candlestick before this uptrend right here. There, that's your play right here. From here to here, 280 pips. I initially had this. This pattern here. Seemed like a big reversal to me. Well, it came up, came down, and came up to this area again, and it's melted. Okay. Melted. But if you go on the daily, seem to hit this top right here, and then went up right here. See right here, you got this reversal pattern right here. Look at that. Lower time frame. Got this reversal pattern right here. And then you get like a perfect flag right here. You get this impulse, and you get this little flag right here. Get this impulse, and you get this flag. It's going on lower time right here. Look at that. Impulse, flag. Right. Impulse. Flag. This is on a 5-minute time frame. You get this huge move up here. Right here. So from here to here, 580 pips. What's going on here? Okay. $580 pips. So if you were to enter like in this area, your risk to reward, stop loss is below here. Catch this move right here. 11 to 1. 1 to 11. That's pretty good. 50 pip stop loss though. It's kind of too high for me. But you could have entered right here. Some resistance. Comes down, breaks resistant. Now this becomes the floor. And you get this move up. Oops. Get this move up right here. So let's see. If you enter here, stop loss is right here. Okay. Below this low right here. And say you take profit right here. I'd say 2-1. It says 62 stop loss. 62 pips. It's kind of high. 8-1. It's pretty good. That's actually really good. But right here, see, nothing goes straight up. Nothing goes straight up all the time. It has to pull back. The market just doesn't go straight up. It can't do that. It has to pull back. Then it goes back up. See market kind of here, pulled back here, pulled back here, pulled back here, into the bigger pullback here, comes down, comes back up, then comes down. So this right here this area where I thought initially this was going to bounce up from here, bounce up here. This right here was just a little flag right here. Boom. That's all. It just kept on falling. I kind of noticed that too. Just a seed right here. You know, it's how it's just bouncing between these two lines. Get this impulse. Get this impulse down. And get a flag right here. Impulse, flag, continuation. Right? Impulse, flag, continuation. Even right here. Impulse, flag, continuation. Or support, breaks, resistance, comes down, resistance, comes down. I mean, it's easy. It's easy. Okay, you could have entered right here for a short position right here. And right here. This trade right here. Current price is right here. The stop loss is here. It's 4-1 on your money right here. 4-1. Simple trade right here. Simple. 4-1. What else? Oh, silver. Yes. Silver. I really, all this consolidation right here. Oh, I hate it. I hate it. I see price came up to here. Right? Price came up to here. It fell down. It created a little flag right here. Right? You have this impulse. And it creates another flag right here. Then you get this move down. And then price reverses and comes up here. But from here to here, that's a lot of pips. Not quite sure how many pips that is, but it's over 500. I think it's over 700. from here to here. But silver, I looked at this. This is stupid. I think this is not really. This is not aggressively moving down. It seems like got your impulse, and now it's creating a flag. Not quite sure. Not convinced. Not convinced yet. Because last Friday you got this impulse. It seems to be creating a flag right here. So is this gonna come down? Or is this part of the bigger flag right here? We'll see. Really like this though. Too much consolidation. Gold. As you see gold, yeah, same thing. Last week gold fell down here like 2 weeks ago. Then it came back and it fell. But I'm not quite convinced. I mean, it broke structure, but okay. So right here. Gold could be coming back up to this area right here. Not quite sure about this. Looks like an impulse to me. And a flag. We'll see if it comes back up. I think it possibly can. Look on the weekly. Well, you know, on the weekly, right here, has equal highs right here. Okay. So, and this is the last up candle before this big down move. This is back in August 2011 right here. And you have these equal highs right here. So banks want to take these out right here. We're almost there. Yeah, it didn't break these highs yet. Let's see what happens. Silver. Ooh. Now, doesn't this look familiar right here? There's a saying. If it's fast, it won't last. But if it's slow, it'll grow. So, back in 2011, silver shot straight up. Okay? Shot straight up. And then, for like a week, it was like up here. And then the next week, got this huge move down right here. And then since 2011, silver came all the way back down to here. It was at $50 right here. Then just a couple weeks ago, it went down to $11. $11.65 right here. But this looks very familiar. I'll show you. Looks just like Bitcoin. Almost like Bitcoin on a daily. Look at that. Very similar type of movement during the crypto crazy year of 2017, of the fall of 2017. I remember when I was watching Bitcoin, it was at like around May. It was like $1,300, 2017. I remember that winter it was at like $700, and I didn't know that much about it, but I kept on hearing people talking about it, and I really didn't know anything about trading, but I was watching the price, just keeping an eye on it. And then that whole year, it just climbed up. And then that fall, Bitcoin just went from 6,000 to 20,000. But as you see, it shot up. Shot up, but didn't have any pullbacks. Didn't have any pullbacks. It just shot straight up. And then it just melted. I feel bad for all the people that bought right here. Yikes. It came all the way back down to $3,100 right here. Or $3,200. A year later, it was at $3,200. But that looks like silver. Okay. Similar. It's fast, won't last. But if it's slow, it'll grow. Let's go back to Bitcoin. Daily. Right? If it's slow, it'll grow. If it's fast, it won't last. As you see here, get an impulse, get a little flag right here on the daily with Bitcoin, and get this big up move right here. Then as we see, Bitcoin, okay, on the daily, I had price possibly reversing around here, okay, and it blew through that. Now we're feeling this imbalance right here. So I was looking at this area right here. And we spiked up, but now we're in this area again. But Bitcoin could possibly come back up to here with this candlestick right here, this last green one. Highlight this area right here. But like I said, if it's fast, it won't last. Right? If it's fast, it won't last. If it's slow, it'll grow. Ah, yes. Let's look at the Dow Jones. Okay. So I would like to talk about. There's a congresswoman that's in huge trouble because she had millions of dollars of stocks and she sold them all in January, somewhere in here. And then this big crash happened. Okay. So a lot of people think that there's insider trading stuff. It's possible. But this is coronavirus news right here. Okay. This thing. This pattern right here. Let's do this. Okay. This is February. This is right before coronavirus on the 4-hour. You get this reversal pattern right here. Reversal pattern. This started to form in October. Okay. So if that congresswoman knew about patterns, or anybody knew that this was a reversal pattern right here, could have told you that the market was going to go down. Even like from here. Okay. And from here. Anybody could have told you this is a reversal pattern right here. Anybody could have told you that. So if I would have had millions of dollars of stocks, I would have sold right here too. As we see, boom. Coronavirus crashed the market. I gotta say that the powers that run this, that run the stock market, the banks, hedge funds, all that stuff, all those big top people that control this, they use the news as an excuse to move price. So coronavirus hit and they use that to drive price down. Price, the Dow Jones was already, they were already planning on this downtrend right here, on this move right here. It was already going to happen. They just needed a news event to push it down. Everybody wants to blame the coronavirus for crashing the market. And it's really not their blame because this was already going to happen. The powers that be needed a news event to move price down. So that's all I want to say about that. One guy I follow, very successful Forex trader, he said last April of 2019, he said, you better save money and pay off bills because the market is going to crash 12 to 18 months from now. And 12 months later, it crashed. Because here, April, he said that April 2019 right here. Because this pattern here kept on coming up. Here. That is a huge reversal pattern right here. Huge. When you first said it, I thought, oh, yeah, right. Yeah, right. Okay, whatever. He was right. Patterns do work. This is a massive reversal pattern right here. So, as we can see, price is kind of broke the structure. We didn't go back up. See, now we have this big impulse. So now, are we going to get something like this? And down? So then create a flag and go down. So it came close to this. It fell down. We'll see. Let's see what else. What else? USD Canadian. Okay. Price came back down to here. It shot up. US drawing, US dollar. Reversal pattern. Came back down. Now, let's see. Here. Let's go on the daily. So that's switch right here. For this down move, so last green candle. Price came close to it, didn't touch it. Came within 15 pips. Yeah, the Australian dollar and New Zealand dollar is tied with China. China's in big trouble for letting that virus out. So since their dollars are tied with China, when negative news happens about China, the Australian dollar and New Zealand dollar get weak. Okay, so what are the plays for the week? Okay, this is what I would like to see. Right here. I like to see this. Okay. I'd like to see that. Higher time frame. See what happens. Price comes back up to here. Here. Or yeah, in this area. So it's solid. It does come back up to here, fall down. Same with the euro, Australian. It's kind of aggressively coming down. I want to see something like I would like to see something like this. Down, up, down. Alright, let's see something like this. Then you know it should go back up. But it's just kind of falling back. Same with the euro, New Zealand dollar. But we'll see. It's nothing to get into right now. This is a big move, so it has to pull back a little bit. Great Britain pound Canadian. Looks like it's gonna come down some more. See what happens. Don't really. Is this one big flag right here? Up, down, up. It's possible. Oh, man, this trade. Right here. Great Britain pound, Australian dollar. 500 pips right here. Strong daily. Okay. See. Tap the body. Tap the wick of this last down candle for this uptrend. And see the top of the wick right here. Man. A 20 pip drawdown. The Great Britain pound, Australian dollar. That's pretty good. And then you get this reversal pattern right here. Right here. And then it just explodes. So your risk to reward for this trade Okay. Say your risk is 30 pips. $17-1 on your money right here. You risked 1% right here. As you see, price did not hit your stop loss right here. 17-1. You risked 1% and you gain 17%. One trade. If you risk 2%, you gain 34%. That's incredible. Really. Incredible. One trade. In 2 days. This day, and then this is the daily timeline. So we did this day and this day. Man. $17-1. That's crazy. Okay, so daily time frame. Get this engulfing candlestick right here. So let's see if price hits the top of the body of this daily candlestick, like right here. Let's see how it reacts to this right here. I would like to see it bounce up and go up. Go 1 hour. See, it's starting to slow down a little bit. Man, 17-1. 17-1. That's insane. Yes, the euro, Great Britain pound. Finally, it made this move up here. It came all the way back down. Then it made another move up here. I really don't like this pair. It pays out really well, but it's kind of slow, and it's just, I just think it's so annoying. I don't really trade it. Euro Swiss franc. Ah, I see this. Shot up, came down, up, down. I don't like that. Yeah, this is stupid right here. You seem to be in this huge channel right here. I don't really care about this. So my plays of the week are I like to see this come back up and then down, up, down. Then you can get in for a short up here. Same with the euro, New Zealand dollar. Same with the Great Britain pound, Australian dollar. This right here, I like to see it come up like this. Then get in for a short right here. Great Britain pound, US dollar. Not too sure about this. Let's see what else. I was looking at the Australian Japanese yen last week. Because you had this here. But that news with China spiked this up, came down. I didn't like that right here. That was probably a stop hunt right here. Banks were like, everybody's selling right here. Let's take everybody out. And that's probably what they did right here. Let's look on the daily. Okay. 1 hour. Excuse me, tired. So, let's see if it does this. I'd like to see that. Okay, so I was watching the Australian Canadian dollar too. This can be super annoying. So you have this pattern right here. It's like a perfect channel right there. Then it just explodes right through it. This looks like it could come back up. It's kind of annoying. Okay. So anyways, that's kind of what I'm watching the Australian US dollar, New Zealand US dollar coming up. Yeah. As you see, price came up to the top of these wicks right here, pierced it and fell. So we'll see if this creates a little flag and down. Euro, Canadian dollar. Normally don't really trade this. That's a huge movement right here. But if you look at it, it's a huge reversal pattern right here. Even right here. That's a big reversal pattern right here. So this move was going to come. This is the daily. Just a matter of when. Definitely takes its time. It's too much consolidation right here. Too much. I'm getting tired. Okay. It is 1 o'clock in the morning. So this looks like impulse flag. Continuation up. We'll see. I don't like this. I don't really trade this that much. Okay, so that's all that I have today. We'll see what happens this week. I'm definitely watching this. I can watch silver. Watch gold. Yeah, this is just one big flag right here. We'll see. Alrighty. That's all.